Greetings, Algo artisans. We got a special show today. First of all, Bitcoin is continuing to fall. It's dumping, if you will. How low will it go? We'll take a look at that. And Japan might be interested in buying Bitcoin in their pension fund. That is humongous news if true. So first, we're going to start out in the charts. And let's get into it right now.
If Bitcoin will become the ultimate type of a form of the currency been adopted by human society, I can tell exactly what's going to happen as the worst scenario or the must scenario. We're all going to die. This is not a joke.
Okay, so Bitcoin is falling. We have lower highs, lower lows. This is the high time frame chart. We had a couple of liquidity levels mapped out, and since the time we did this show yesterday with those liquidity levels, essentially there just has been a ton of liquidity down here. A lot of people have gone long, a lot of stop losses kind of along the way. So our most likely spots for price to go are going to be involved with structure as opposed to liquidity, because liquidity is just kind of everywhere right now. Now, there are areas of liquidity to be certain. I'm not saying it's just completely disorganized, but there also is kind of an implied liquidity that's not on the liquidity maps that shows where people might be interested in buying and selling, and a lot of it has to do with what happened in the market prior to that. And I have about 53,000 as opposed to 55 yesterday. Now we're getting closer to 53 as a place where price could easily go, or it could just simply stop going down. A lot of things can happen, and with Bitcoin being bought up in a massive way by large players, that is going to have a big effect on whether or not this continues to fall or whether or not it simply just recovers where it is and heads back up. Now, we did talk about this just a couple of days ago. A 20%-ish fall from the halving is going to be around 55,000, and a 30%-ish fall from the, not the halving, but the all-time high would be about 49,000. And these are areas where there was liquidity, still is some liquidity, and there are some decent reasons to think price might go that low. However, it might not do that. Halving's in about a month, and price usually starts to head up right before, at, or just after the halving, at least in the very little data we have from prior halving years. Okay, so that's just a quick review on Bitcoin. I do anticipate Bitcoin doing one or two things. It may kind of find some support around here, and then at this time we might have some clues as to which way it goes based on a breakout. If we get a bit of a range and then a breakout, that breakout could be a clue as to which way things are going to go. Plus, I have a look at the higher time frame algos. Of course, high time frame Bitcoin is always bullish. Mid time frame, a bit bearish for now. I do not expect Bitcoin to go back up right away, although we might see some moves up. We might see even price kind of pop up from here to grab liquidity and then head down, but I do not expect Bitcoin today to head back up to go see the highs. I think that might take at least another day or a few days or even a few weeks. We'll see as that unfolds. So what might push Bitcoin up? Well, one of the things that works with any kind of tradable asset that has a limited supply, such as Bitcoin, is supply and demand. In fact, that's the main thing that works. That's what determines price. The supply is heavy when people are selling, right? People are putting more supply into the market. The demand eats away at supply, right? If there's more demand, people buy, and there's less supply out there to buy, and the price goes up because of scarcity. And Bitcoin is based on scarcity largely. From a market standpoint, we're talking about. In this particular case, we do have what may be a very large, in fact, we could say the largest player in the pension fund world entering the market. Let's take a look at who that is. Bank of Japan. First of all, they are talking about Bitcoin, but before we get into that, there is a piece of the puzzle that might even accentuate this concern or this possibility of Bitcoin, of Japan getting into Bitcoin. Now, this article on CNBC, BOJ ends the world's only negative rates regime in a historic move, abandons yield curve control. So there's a little bit of things, a little bit of data here that I should probably explain. It's, first of all, this is the first rate hike that has been seen in, I think, like 17 years. The rates have been negative for the better part of a decade, and Japan's been operating kind of on a system where they print pretty much infinite money. I mean, not infinite, but they print a lot of money. They print a lot of cheap assets, and they use those assets to, prop up markets. They'll use those assets to actually purchase other assets around the world that actually appreciate. And then, of course, while they're printing that money, they are essentially devaluing their currency. However, there has been a sort of demand for the currency because there is a direct relationship with the Japanese yen to the U.S. stock market. And historically, what happens with the U.S. equities market is that as money flows out of equities, as equities fall, as the stock market falls, the Japanese yen usually goes up because money flows into the Japanese yen. Kind of the relationship that has kept, at least in part, the demand for the yen relatively strong, despite the fact that they continue to print it. There's another factor that matters here, and it's called the carry trade. Now, what happens is the Japanese bank, the Bank of Japan, will print their bonds. They'll create bonds, essentially printing money, and then they will use that money to buy U.S. bonds that have a higher yield. So their money is actually leaving their country, chasing yield around the world, U.S. bonds, equities around the world, different investments. And as this winds down, as this negative rates regime winds down, what we might see is money actually going back to Japan and investing in its own market. Not that it doesn't already. Much of the Nikkei, I want to say 60% of the Nikkei is owned by the BOJ, and the Nikkei is their version of the Dow Jones. So much of the stock exchange over there is owned publicly, but they have one of the best funded pensions in the world. I want to say it's like over $1.3 trillion or something like that. They also own about a second largest owner of U.S. debt. So with this change, there is a big change coming. Okay, this is an indication of big things. Now, for now, they're going to keep things kind of the same. They're going to keep rates pretty low. They'll probably continue the carry trade. I don't think they intend to continue, like to just overnight make a big difference. That would really wreak havoc on the entire economy. I think they're going to institute change slowly, but I think they want to get away from this model of zero and negative interest rates. They are the last country on earth to leave the negative interest rate model, and they actually are going to, well, they're going to abandon yield curve control in a way. They actually did say that they will buy future bonds, which is a form of yield curve control. We'll talk about what that is in a minute. If they need to, they're going to do some of the same things that control the yield curve. Now, what the yield curve is, without getting too deep, it's a way to control the interest rate for long-term bonds. There are short-term bonds, there are long-term bonds, and if you want to sort of keep a lid on things in your economy with your monetary and fiscal policy, you have to control the bond rates. And one of the ways to control the bond rates is to control the supply of those bonds. And one of the ways to control the supply of those bonds, if you have to print those bonds for your economy to operate, is to go ahead and buy them up yourself. And if need be, they will continue to do that. So I don't believe this is a need for immediate concern, but it is a very big piece of the world economy. And one of the things they're going to do is they're going to search for yield elsewhere. And where might that be? Well, yet again on CNBC, world's largest pension fund explores Bitcoin as an investment. Japan's government pension fund on Tuesday said it is requesting information on illiquidity assets such as Bitcoin as part of research into potential new investment. Government Pension Investment Fund of Japan is looking for information about assets such as Bitcoin and how these might be incorporated into the portfolio of pension funds. The GPIF's statement comes days after Bitcoin hit an all-time high and after the world's largest cryptocurrency has rallied more than 130% over the last year. That is humongous news. Bitcoin's market cap right now, I think, is around $1 trillion, at least within orders of magnitude. Here's the thing about Bitcoin. It's not like 100% of it is available. I think 70% of holders have never sold, if I understand that properly. So, let's just say that 80% of Bitcoin's locked up and nobody's selling. I think it's a lot higher than that, but let's just say it's 80%. That means only 20% of Bitcoin is out there. If the BOJ only incorporates a couple of percent of their portfolio into Bitcoin, that is going to raise the price by 5 or 10% all by itself. And that could actually cause, because you only have 20% of Bitcoin out there. So 20% of Bitcoin, and if you hike that by a full percent of the portfolio, that's actually going to mathematically increase price of Bitcoin by 5 or 10%. That is huge for one actor to do that. And if one actor does it, who else is going to do it? We could see a runaway in Bitcoin, like a completely unexpected runaway due to this. These are massive amounts of money going into Bitcoin. So understand that mathematically, if Japan even puts a percent or two, not only could it raise the price 5 to 10%, but this could spark an entire flood of other pensions moving in. It could also decrease the, and I made that 80%, 20% number up out of my head. It could be only 5% of Bitcoin is out there. That's the circulating supply. I didn't look it up. If it's a 5% circulating supply, technically they could raise it by, 20%. I mean, they could really take a big chunk out of the supply and increase the price. We have no idea what it's going to be, but again, it could spark a massive move into Bitcoin from other institutions as well. So this is humongous news for crypto. And as Bitcoin goes up, the other cryptos go up. Historically, it's always happened that way. I see no reason for it to happen anymore. Just a quick reminder on the charts from this morning's show. I do have a target above Bitcoin at 88,000. If price breaks the all-time high, it might make a stop off at 80,000, but I do believe what it might look like, it might be incorporated with the halving, or I should say timed with the halving, to where Bitcoin kind of goes down, retraces, even builds a floor, and then really rockets up and could go really fast. And I would not be surprised to see Bitcoin over 100,000 before the summer is out. It would not surprise me at all. Remember, as Pomp said, as Anthony Popliano said, 3 out of 4 times Bitcoin broke its all-time high before the halving. Price doubled within 18 days of that. Now, I think we are either near or past that, so I don't think that's necessarily going to happen, but it does mean there's a lot of upside. And to go from 70 to 100,000 is not that big. That's less than 50% gain. Very realistic. So I would strap in, and even though we might not see the price go up right away, unless traditional finance takes a hard hit, then I would expect Bitcoin to be breaking 100,000 very soon, sooner than you might think. Anything can happen, so none of this is investment advice. In the meantime, please come over to algofactory.tech. We teach people how to pull money out of the market on a regular basis. We teach them how to create their own trading method where they can do that, where they can actually extract money, whether it's daily, weekly, monthly. If they are able to have the discipline to put that plan together, this is within their grasp. So please come on over algofactory.tech, trade your job, upgrade your life, and we'll see you on the next one.